Dividend Stock Talk. Not selected. Let's get ready to rumble. That wasn't it. There it is right there. Oh, check it out. Hank's first. Oh, Michael's here. Michael Stewart. Hank the Tank. Mike, no nickname. How you doing? Neil. Dark Mocha. Papa G. Really? You had to steal my name, Papa G? You suck. Howdy. No name. Joshua Davis. Mike Concho. Guy on the North Shore. Cool. Lake Cambry. Snipped Life. I'm kind of curious what that means. Snipped Life. Stanley Bunk. Okay, Havoc, Rocky. What's happening, Joshua, Marion, all you guys? How are you doing tonight? Let's get ready to roll. Not a whole heck of a lot happened today. Why are we here? The market wasn't open. Well, we're here because I said I was going to be here. Greetings, and how are you doing today? Now, something stuck in my throat. Anyway, it is the 9th of January, January 9, 2025, the second week of the first quarter of 2025, also known as week number 2. Gen X99, how you doing there, man? Cool beans. Let's get ready to roll. First and foremost, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, it's a simple strategy I created for my 9-year-old daughter. 2008, she jumped on my lap and said, Daddy, can you teach me what you're doing? Something, maybe not that exact phrase, but something close to it. Brown Pelican, how are you? Crypto Boy, Doug Stoughton, cool beans. All right, so, as I was saying, I created for my 9-year-old daughter. Dugga, can I have your thoughts on WN, waste management? See, I hate doing this first off because Waste Management is a great company. Unfortunately, it's a monthly optionable stock. What does that mean? Lincoln, how you doing? What does it mean that this is monthly options? Well, a stock option, you got a couple of choices. You get the call, you got the put. Well, those are those two choices. But here's the thing. You have a weekly option, which expires every Friday or every Saturday, whichever you prefer. And then you have monthly options, which you can do once a month, and that is it. Okay, Vial, Argo Blockchain. No idea. Oh, ARBK. Wow. Now, ARBK. Sorry, dude. Vial. ARBK is the exact same as Waste Management. It is a monthly optionable stock, which means I can only do it once a month, which means it doesn't work for me. Okay, the only way you are going to get weekly cash flow from a company like this is to sit in front of your computer all day long. Okay, user 1126647454119. That's a lot of freaking numbers. Or take a look at Harley Davidson. HOG. Now, Harley Davidson, different story. Weekly options. Something I can trade every single week. Thoughts on SoFi. SoFi has no dividends. Okay, so basically no dividends, no thank you. So the question I have for you. It's Tony Capital. Okay, Tony, if the name of the show is Dividend Stock Talk, right? That's the name of the show, Dividend Stock Talk. Why would you come on a show called Dividend Stock Talk and ask me about a company that doesn't have dividends? Boggles my mind. Okay, KFC, what's your thoughts on breakout trades, break and retests? I think you just answered your own question. It's not what I do here. What I do here is simple, safe, predictable, consistent 1% a week using pre-qualified dividend stocks. Now, when I say pre-qualified dividend stocks, those are companies that have consistently increased their dividends for a minimum of 2 decades, 20 years, consistently profitable. That's what I'm looking for. And weekly options. I got 2 criteria: consistently profitable and weekly options. Okay? Okay, Raffaello, do I mean 1% of the total stock holdings? No, Raffaello, I do not. What I mean is, if I have $100,000 in my trading account, I will go 20% here, 20% there, 20% there, 20% there, so on and so forth until it's all spent. The 1% is 1% of the whole account. So if my account has $100,000 in it, I want $1,000 a week. Okay? $1,000 a week. Now, we are looking at Harley Davidson. So let's take a quick gander at Harley Davidson. Before I do anything, I always want to take a look at the 1-year chart first, before I look at anything else, because it's a quick 3-second test to see if I want to look at it some more. All right, well, let's go. Okay, 5 things. High, low, where was it, where is it, and what's the direction? You just take your little finger and it goes something like this. Up, down, up, down, up, down. Well, this doesn't look very good right here. Now, I say that, but I actually own some Harley Davidson, so I'm not going to want to look at that. Clemo, St. Louis, support and resistance line limit margins. Yeah, I understand what it is. Okay? But Clemo, what you're missing, because you're new here, you haven't been here before. Yeah, I get all that. Okay, you're throwing all this stuff out there as if I don't know it already. So what you're missing, because you're new here and you didn't hear the introduction. The introduction was specifically, are you ready? I do one trading strategy and only one trading strategy. I give it away for free. I don't try to sell anybody anything. Now, it was created specifically for my 9-year-old daughter. It had to be simple. So everything you just said went right out the door. Simple, safe, predictable, consistent, and no way for her to lose. That's for my daughter. It had to be that way for her specifically. So all the stuff you're saying is for advanced traders, people who have been doing it for a while, not a 9-year-old little girl. Now, why am I only teaching this one? Well, because this one, it's simple, safe, predictable, consistent. You can make 1% a week. 1% a week is 50% per year on 10 minutes or less a day. I don't want to sit in front of my computer. If you're at that age where you like sitting in front of your computer, making lots and lots of money and just spending your life sitting in front of that stupid machine, more power to you. I'm past that point in my life. When you get to the next phase of your life, and don't kid yourself, your life goes in phases. Tim McCarty, how are you doing? Your life goes in phases. There's your childhood. I mean, your really, really childhood where you don't remember, that childhood. Then you have your adolescence. What is that from? The moment of realization, what was it, 8, 9, 10 years old was the moment of realization. And then from that up to like 12 or 13. And then you become a teenager. And then you become a young adult. And then you become an adult. And then so on and so forth. Well, at the last stage of your life, is retirement or the golden years. Well, that's where I am now, okay? So I don't want to sit in front of my computer. I don't want to go to work every day. I don't want to have to worry about money. So for me, and this is all I'm doing, I'm just showing you what I do. If you have some ideas, fine, I'll take a look at them, but it's not going to change what I do. Okay, I'll give you my opinion of whatever it is you ask, because believe me, In the 60 years that I've been alive, which means I've been investing for about 20, 23 years, somewhere in that area. I know a lot, I've seen a lot, and I've done a lot of stuff. So most of the stuff that you ask me, or you think that I don't know, I probably do. I don't use it, I don't teach it, I teach one strategy because, here's what, you're going to hate this answer. Because I grew up in the 60s and 70s. We were called the Generation X. We just, we were set free in the environment and say, figure it out. That's what we just get the hell out of the house, figure it out. That's what they told us. Great. So, if you're expecting a safe space, it ain't here. If you expect me to respect your feelings, it ain't here. Terribly sorry. Point blank, if it works, great. Don't mess around with it. Okay? Simple. If it works, don't mess around with it. Well, this thing works. Okay? And it works so well, I really don't do very much of anything else. So if I can get 1% every single week on 10 minutes a day, do the math. 10 minutes a day is less than 1 hour a week. So if, I'm going to show you one of my accounts because, I share 3 of them. Now, I got 7 accounts now to take care of. And look at account number 1. Okay? $188,000. All right, so let's just hypothetically speaking. Okay, $188,000, 1 hour a week gets me 1%. 1% of $188,000 is right around $1,900. $1,900 for 1 hour of my time. Now, there's a bunch of other accounts. I only share 3 of them with you guys. Don't ask about the other ones. But I only share one trading strategy. And if 50% a year is not enough from you, then you are in the wrong place. I'm not looking for capital appreciation. I'm not going to say, oh, that stock looks great. It should go from here to here. Really, I honestly don't care about capital appreciation. I don't care if the stock goes up. That's not what I'm looking for. I'm looking for cash flow. My number one priority, consistent increase in profits. That's it. If the company doesn't consistently increase their profits, I want nothing to do with them. It's actually that simple. And the increase in profits that I want are 2 decades, 20 years. That's it. There's 9,813 different companies you can invest in on any day. Any day. 9,800. That's a lot of companies to go through. But here's what I'm looking for. 20 years, 2 decades of consistent increase in profits. Okay, and you have a choice. You can take a look at all the quarterly reports, all the annual reports, all the earnings reports, or you can go straight to the dividends. If the dividend increases, then more than likely, if the dividend increases, the profits increase. Because the dividend is a portion of the profits the company gives back to the investors. And that's us. And if the dividend increases every single year for 2 decades, those are the companies I want to look at. I hope you got a pen and paper. Here they come. Are you ready? Dividend Kings. First list, Dividend Kings. 54 companies that have increased their dividend payments to the shareholders for more than 5 decades. 54 companies. I'm pretty sure you can find 1 or 2 that you like. List number 2, the Dividend Aristocrats. 65 companies. Last year there was 67. This year there's 65. 65 companies that have increased their dividend payments to their shareholders for more than 25 consecutive years. Okay? List number 3, the Dividend Champions. 150 companies that have consistently increased their dividends to their shareholders for a minimum of 25 years. Yeah, I know, sounds just like the aristocrats, but the aristocrats are a little bit more picky. It's a little harder to be an aristocrat than it is to be a champion. But they both share one thing in common. 25 years of increased dividends to the shareholders. All right? List number 4. The Dividend Contenders list. The Dividend Contenders, 300 companies that have consistently increased their dividends to their shareholders for more than 10 to 24 years. Okay, not all going to make my list because I want 20 years or more. So I don't do all the contenders. So I do a lot of them, Okay? Now, every once in a while, I will throw something in that doesn't fit this at all. And more than likely, it's coming from list number 5, Warren Buffett's stock list. Okay? So if it's good enough for Warren Buffett, I will look at it even though it doesn't fit my personal parameters. Okay? So, more than likely, I have been doing this for a whole year now. Last year, all year long, I missed 6 days. That was it. That means 359 days. I did 2.5 to 3 hours every single day, bringing this information to you. This is year number 2. Things are going to be a little bit different. I'm not going to do 7 days a week anymore. All right? Now, I did try to do the East Coast, West Coast thing, 9 p.m. East Coast, 9 p.m. West Coast, but the West Coast people are just weird. They are. They ask stupid questions, a lot of nutballs out there, and I'm putting myself up here to 2:30 in the morning. Yeah, no thanks. I'm not doing that anymore. I gave it a shot. I was trying to be fair, 3 hours here on the East Coast. Okay, let's do 3 hours on the West Coast. See what they look like. See what they have to say. Yeah, a lot of weird people out there. Just my take on it. Doesn't mean it's true. You guys figure it out yourself. All right, so that being said, let's get rolling. Let's take a look at some good stocks. What I'm going to do, I am going to answer each and every individual questions. Now, please understand, I have 6 cameras going, which means Facebook, Instagram, TikTok, YouTube, Rumble, and we're going to be broadcasting somewhere else. As I get approved to do so. So there are a lot of questions coming in. I'm not ignoring your question. So when you put your question up there, it may take me a while to get to it. So please just ask it once. All right, let's get rolling. John Jones, what's up? How's my favorite trends you? That's funny. Alrighty, so here we go. Raffaello, when I say 1%, I mean 1% of the total account. Okay, so if you got, say, $50,000 in your account, 1% should be $500. I have to go all the way back to the beginning. All around, what's happening? All right, Gary, KG, Donna, what's happening? Gary, Simon, Stingray, Audi, Akeem, Quantum X. Ooh, what a regal name. Shane. Natalie. Is that Natalie or Natalie? Natalie. Nate. All right, anyway, Joe. Joe Berman. How are you? I'm back again. BT100. Cool beans. Okay, ARB. Back again, dude. Gabriel, how are you doing? ARB wants to take a look at Dover. Dover Corporation, I'm pretty sure. Wait a second. Hold on. Hold the phone. Sorry. Hold on. I didn't finish Harley Davidson. Sorry. So let's hold up for a second. Let's let's finish up with Harley Davidson first. All right. Here's our high. Here's our low. Here's where it was. Here's where it is. Up, down, up, down. Doesn't look very good. 29.45. So I want to look at the 30s. Well, I'm going to look at the 29s and the 30s. The 29 is a safer trade. The 30, a little bit more profitable. So you guys got to figure out, which do you prefer? Profitability or safety? Me? Safety. As long as it's 1%, I'm going for safety. All right. 29 is going for 45 cents to 160. So I might be able to get it out of there if I can land somewhere around 75 cents. That's what I'm looking for. The 29, I'm looking for. Yeah. All right. So anyway, the 30s are going from 15 to 25. Yeah, that's not going to work. So it's going to have to be the 29s at $1.25. So Brian Woodward, I'm going to answer your question with a quick yes. But I am extremely picky on who I work with. All right. So Harley Davidson, even though I already own some, if you're looking to jump in, if I was looking to jump into it on Monday or tomorrow, it would be a no for me. The reason being, it's actually at the bottom of the year at this moment in time and still falling. Okay, so basically we call this bottom fishing. They're looking for the bottom. As soon as it finds the bottom, it will turn around and go back up again. Because that's what stocks do. Stocks go up, stocks go down. Stocks go up, stocks go down. So Harley Davidson, they've been around for over 100 years. I really don't think they're going anywhere. They're an American icon. Those companies just don't disappear overnight. Well, and if it did, well, we would be hearing something about it, and there's nothing in the news about Harley Davidson. So, even though I like it, even though I own it, I wouldn't be buying any more at this moment in time, because like I said, she's in a downward trend, so as soon as she turns around and starts going back up, then I will think about jumping in some more dollar cost averaging, that kind of nice, neat, fun stuff. But until then, Dover, D-O-V. Now, isn't Dover a monthly? It is. It is a monthly. Terribly sorry, ARB. Monthlies, the numbers just don't work. Thank you, Michael. He's correct. Dover is a monthly. Now, I don't do monthlies, and here's the reason why. And it will save so much time. And we will be able to look at a lot more good stocks that actually do fit, that do work. If you guys, the audience, only give me companies that are consistently profitable, which Dover is, but also have weekly options. So when I tell you I created for my daughter, simple, safe, predictable, consistent, in a way for her to lose, those five criteria. Well, I came up with 5 rules. Now, 5 rules are very simple. Rule number 1, never buy something you don't understand. What do I mean by that? If you understand what it is you're buying, you would know that Dover has monthly options. And monthly options are a no. That's a no. KR, Kroger, and Coca-Cola. Well, I like both of those. Coca-Cola and KR. Okay, give me a minute or two. We'll take a look at those. Joe Berman. Lowe's. Ooh, I love Lowe's. I actually buy Lowe's every year. Now, let's take a quick look. As always, takes three seconds. Hold on. Climo, I feel like interest rates. Oh, okay. I love this. I feel like interest rates could act as the overall drawdown parameter. May the pips be with you. Oh my goodness. Yeah, whatever. All right. I need to move this over so we can see it better. Can I see it? Nope. Whoops. There we go. That works. Okay, so here's Lowe's. I just need to move the screen over so it works better. Kroger is a weekly, but not a trade right now. Okay, Michael, I'm sure. Thank you for that, Michael. Really, seriously. But I'm pretty sure everybody else is going to want to see it. So I am going to take a look at it. Earnings phase, quarterly, annual. Yeah. I don't know why it is you feel, and I'm speaking to you specifically, why it is you feel the need to let me know how much you know. Okay? It's weird because it's like a dick measuring contest. Okay? You think you know a lot that's going to make me change what I'm going to do. That's a good one. I like that. But you can keep on spewing everything you know, making yourself sound, really smart. Okay? Go ahead. Be my guest. It's not going to change my points of view. Okay? It is what it is. All right. Lows. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down. What's going on here? Here's the last couple of weeks. This is what I want to find out what's going on. Okay, from there, I'll have a good idea of what I want to do next. Yep. Yes, I have Harley Davidson at a higher price. We'll hold it forever. No, I sell a covered call against it every week. See, it's a little bit challenging when the people over here on TikTok can't see the questions over here on YouTube. Okay, so I will read them out loud as they pop up if they have any validity to them. Okay, so far it's nothing really important. And I feel bad about that because you guys, everyone should be included in the conversation. All right, lows. How are you from India? Okay, we're currently at 255. Okay, so the 255s, nope, I hate it when they do that. It should be at 247, which should be right here. See, the last trade, okay, the last trade was 246.89. Normally, they would open up very close to where it was, which would be 247, not 255, because during the day, when the market is open, it is usually a 2 cents to a 3 cents difference between the bid and the ask. Okay? Right here, it says 245 to 255. That's a $10 spread. That never happens during the trading day. Okay, Tim McCarthy. You made on the call, that's the idea of it, but are losing on the shares. No, you do not lose, Tim, until you sell for less than you paid for it. See, what you're forgetting to understand is you're new here. I've been doing this for a while. It's not as if I stumbled upon this and say, oh, look what I found. No, I created this strategy back in 2008, and I've been trading it ever since. So as the stocks go down, they go down. Fine, I go down with them with the call options. So I'm looking for a 1% per week premium on the positions that I have. If the stocks go down, yeah, well, I just hold it a little bit longer. Because as they go down, they also turn around and go back up again. But if I'm only buying them or trying to only buy them after they're bouncing off of a 30-day top, they bounce off the 30-day bond and start going back up again. Does it happen all the time? No, not all the time. So every once in a while, I'll hold the stock longer than I want to. But what I won't do, Tim, is I won't sell it at a loss. Now, I'll give you an example. Last year, I bought Target at 135. Now, Target at 135 in July started to drop until, wait a minute, not last year, it was the year before, 2023. Yeah, 2023, sorry. It dropped from 135 and down to 102. I didn't sell it, I held on to it. Okay, and it wasn't until November when it was around I think it was at 210 or 110. I don't know, I forget. Don't get old, it's no fun. So anyway, it's at 110 and I sold the 115s. I got like 50 cents per share. Okay, not 1%, but still something. Very next day, it shot up $16. They call it a black swan, which just jumps up. It doesn't happen all the time. It happens maybe once a year, maybe once every 2 years. Okay? Clipped option profits all the way down. Yes, Tim. Okay, 135, I sold the 135s. At 132, I sold the 135s. At 130, I sold the 133s. At 120, I sold the 128s. At 102, I sold the 108s. At 110, I sold the 113s. Okay, then the damn thing jumped up $16. Okay, so I held it for 9 months. Wait a minute. I held Kimberly Clark for 9 months. I held Target for 6 months. So I held Target for 6 months, got 2 dividends and something like 30 premiums, weekly premiums, 30 weekly premiums and two dividends. I lost on Target because when it jumped up $16, I lost 15 grand. It happens. For some reason, I thought it was a one-time stock in option buy. No. I sell options every single week. Okay, Mike, you want to take a look at Walmart, WMT. I wrote it down. We'll take a look at it. So as I was saying, Tim, that makes a lot more sense. Well, here you go. See, if you buy it up here at 290, and it's not slowly dropping, well, yeah, if I buy it here, I can sell the 280s. And as it drops down, I can sell 275s to 270s, blah, 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 and go down with it. Now, as it turns around, goes back up, well, I want to be far enough away from where the action is. And the action, well, they call that at the money, which at this moment in time would be right here. That's the action, at the money. So as that happens, I slowly increase my... It always comes down to a math problem. Please explain Indian market structure. Dude, I honestly cannot help you with the Indian market structure. I know absolutely nothing about the Indian stock market. Nothing. Okay, this here is specifically designed for the U.S. stock market. Thank you. Thank you. You're welcome. All right, so let's get back to lows. I didn't want to jump the gun here. All right, so as I was saying, here's the high, here's the low, here's where it was, here's where it is. Look at the mark. We saw that, okay, a year ago. The bottom was 209.73. Thanks, Tim. Glad you appreciate it. Okay, so 209, okay, that was a year ago. She jumps up, pulls back up again. Look, here's the high of the year. The high of the year was in the middle of October. Okay, 288. Okay, from there, well, high of the what happens at the high of the year? Come on, we all know there's profit taking. What happens during profit taking? The stock drops. Well, as it drops, it gets to a point where we say, oh, let's jump in. It's kind of cheap. Then it goes back up, back down, back up, back down. Well, here's the low of the year right here. So I want to zoom into the low of the year to see if it's a good idea to jump into that. Okay, so we want to look at here. Here's our 30-day chart. Now, why is it that I like to look at the 30-day chart? Well, because the 30-day chart gives me a good idea where do I think it's going next. Okay, so you have 5 positions per account that you hope is zeroed on Saturday. Yeah, basically you got it. It wasn't that difficult. Okay, it was created for a 9-year-old. Now, my daughter wasn't the brightest bulb on the tree. Okay, I love her to death, but everybody knows she's not the brightest bulb on the tree. But if, for instance, Harley Davidson, yeah, Tim, I still have Harley Davidson. I got Harley Davidson at 35. Hold on a second. Wait a minute, put Harley Davidson over here. HOG. Hold on. Hold on a second there, Tim. Here's Harley Davidson. Okay, so I originally jumped into Harley Davidson at $35.79. Well, $35.79 is way the hell up here. Here's where we are now, down at 28. I own it up here. It's down here now. But look at this. I sold the 31 calls. The 31s are only right about here. Okay? I bought a 33 call for further out. It's at 28.88. Yeah, I get it. 28 now it says 28.89 right here. 28.89 is where it's currently at. But yesterday was a new 30-day bottom. Okay, the new 30-day bottom on the 8th was 28.51. So that's the new bottom right there. But I'm into it at 36, way the hell up here. So why did I sell the 31s? Okay, the 31s are right here. Well, because I don't think it's going to go over 31 this week. Now, I look at my account twice a day. Once at night with you guys and once in the morning with my private morning trading group. We all get together and we all look at the same thing so we're all same profitable, okay? So, I saw what it was doing. And I said, all right, fine, I'll sell the 31s. Not that I want to sell the stock at 31. It's just that it's going down. So, yeah, I'll get 31 because it's going to give me my 1% for this week. That's what I'm looking for, 1% every week. Now, as the stock goes up, I will slowly move my strike price up also so I don't lose any money. It's not my intention. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company's consistently profitable. That's why I only do companies that have 2 decades of increased profits. Rule number 4, weekly options only. Reason I say that is I'm looking for that simple, safe, predictable 1% per week. I cannot get that in anything other than a weekly optional stack. Sorry about that, dude. So, weekly optional stocks and dividend stocks that increase for a minimum of 2 decades. And then rule number 5, make sure the numbers work. When I say the numbers, what am I buying it for? What's the closest strike price? What kind of a premium am I collecting? Now, I can do that every single week. So if I can get 1% every single week, absolutely, Tim. Monday to Friday, Monday to Friday, Monday to Friday, weekly options only, because I'm buying a good quality stock at a price that I'm agreeable with. Frank, hold that thought. If you don't settle a loss, what happens to the option on expiration? Ooh, got to go in for you, Frank. Let me finish the question. It goes away, but do you lose any money for the cost of the contract? Absolutely not, Frank. Frank, let me see how much you put in. Okay, Frank, let me see if I can explain it to you in a simpler manner, okay? Now, let's say I'm going to give you 2 examples. All right, so some of you will get one, some of you will get the other. Very few of you may get both. All right, here's example number 1. You're at a party. Okay, you hear a little jingle, jingle, jingle of a set of keys, and somebody says, I'm running to the packy. Who wants something? You throw him a 20, pick me up a 6. Great, he goes, picks it up for you. He says, keep the rest for gas money. Same thing. You're buying something, you're selling it to someone else for a profit, and then you get the money back. Something like that. Okay. Example number 2. Let's say you have an old car in the backyard. Push it out to the front, slap a for sale sign on it, let's say $2,000. Wonderful. Tom from down the street, the guy at the White House, the blue shutters, yep, he drives by. Oh, I like your car. Here, take $500, hold it for me until Friday. If I come back on Friday, I will give you the money for the car. If I don't come back on Friday, you keep that money and then sell it to somebody else next week. Same thing. Okay? Owning something or buying something, getting some money for someone else to hold it for you or to do the transaction for you. It's called a covered call. It's one of the safest trading strategies there is. Okay? You're buying a stock, you're selling it to somebody else for basically the exact same price. Front man, how you doing? For the same price you just paid for it. And you're collecting, thank you, you're collecting a 1% premium. Okay, so I'm averaging 1% each and every week. Do I get 1% on everything I do? No. Okay, this week I believe I get like, I got an ungodly amount of number off of 2 companies, like 8 or 10% for 1 week. Okay, now Harley Davidson, I got 1%. There was one trade I got less than 1%. But it averages. It averages out to 1% per week, and that's my goal. Simple, safe, predictable, consistent 1% per week. So just sit back, relax. There's only one thing I want you to come away with. Just one, okay? No, I haven't checked Walmart yet. I did write it down, okay? I'm old school, I'm forgetful, I write stuff down, all right? Walmart is at the bottom of the list. Sorry, so I have a bunch to go before I get to Walmart. I forgot what I was saying. See what happens when you get older? You forget things. All right, let's keep on moving. So, as much as I like Lowe's, let's take a look at the numbers. At this moment in time, Lowe's is at a new bottom. So basically, Frank, thank you so much for the great examples. So Frank, right here, Lowe's, I love Lowe's, I really do. Here's the great opportunity for whoever else likes Lowe's. 30 days ago was the 30-day high. I don't know. I wasn't listening. Apology. Okay, fine. Can you go over Tesla? Okay, front man, no. Not even going to bother wasting my time looking at Tesla. The reason being, Tesla does not have dividends. And it surprises me, Tim McCarthy. How do you make more than 1% if the stock goes up? Blah, blah, blah. Okay. Sit tight. Questions will be answered. Give it a rest, dude. Allow someone else to ask questions. Thank you, James. All right. So for those who like Lowe's, you might like this idea because it is actually really simple. Lowe's is a great company. They've been around for a hell of a long time. They have increased. They are dividend king. They have increased their dividends for more than 5 decades. About 1,000, like a Tesla. Okay, front man, I can't help you out with that. When you come to a show, okay, or a channel, the topic of conversation, okay, the topic of conversation is right at the top. It says dividend stock talk. Then at the bottom it says dividend investing for weekly cash flow. Yet you come here and ask me questions about a company that has no dividends. I have no idea why you do that. Oh my goodness. Anyway, let's keep on rolling. So, Lowe's high of the 30-day period was 30 days ago. Okay, 30 days ago. Okay, she drops down. Here's a bottom here. She tries to retrace, doesn't do it, but here's your new 30-day bottom. Okay, the top. Here's the bottom. What usually happens at a 30-day bottom? Well, as soon as she finds the bottom, turns around, goes back up, that's a great opportunity to jump in if you like Lowe's. So the one thing I want you to take away from this little session here, thank you for joining me, is, you ready? Here it is. You might want to write it down. Does it make sense? James, covered calls ain't hard. Just listening to James is straight. Thank you, James. Okay. What is Lowe's ticker? LOW. Okay. Now, for those of you guys who don't know, okay, the screen right here behind me is live on YouTube. Okay, live on YouTube. So if you can't see these little numbers on your phone, your tablet, or whatever it is you're viewing with, okay, the screen all by itself is live on YouTube. Okay, specifically for you to see the numbers better as I explained it. Okay. That being said, I love Lowe's. I do. I would personally wait until it actually turns around and goes back up. I like 2 days to the upside before I jump in. See, right now is the 30-day bottom. Okay? I've never, ever, ever heard anybody say, hey, look, Lowe's is at the high of the year. Let's buy it and wait for it to go higher. No. Buy low, sell high. You cannot get Lowe's, this is going to be funny, you can't get Lowe's any lower than the 30-day low, which also happens to be the 90-day low, also happens to be the 1-year low. This is the low of the year. You can't get any lower than the low of the year on Lowe's. Kind of funny, but think about it. You make money buying low, selling high. All right, please, companies that are consistently profitable and weekly options. Great. I like Lowe's, but not this week, maybe next week. Let's go on to the next one. Okay, Brian Woodward, I answered that question for you. If you want to DM me, I will DM me with your phone number. I will give you a call. Now, I tell that to everybody every single night if you really want to talk to me. Mitchell, it looks like Lowe's is going lower to me. Yeah, it looks that way. So you keep your eye on it if you like the company. Okay, it is a dividend king, which means they increased their payments to their shareholders for more than 5 decades. Okay, if it's important to you, if dividends are important to you, if cash flow is important to you, then that might be something you want to keep in mind. If you're looking for capital appreciation, okay, and please don't ask me the difference. If you have to ask the difference, you shouldn't be investing at all. Okay? Capital appreciation is where you buy and then it goes up. And you just hold on to it until you say, that's high enough. That's capital appreciation. Cash flow, well, those stocks go up, down, very slowly. But they pay a dividend every 90 days. Well, I just came up with a strategy to take those stocks, dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list, those stocks, and I rotate them. Specifically based upon, you ready for this? This is going to be weird. the calendar. Because the calendar tells me when is the company paying the dividend. Why is that important to me? Well, because just before the dividend date, that's what these little green dots are. Just before the dividend date, the stock has a tendency to go up in value. So if it's going to go up in value, and I know when it's going to go up in value, that's why I throw in that little safe trade. Okay, the simplest trade is just buying a stock, but there's no predictability there. Anyway, James, you can use most trading platforms will show you Dividend Aristocrats and Dividend Kings. Yeah, you're right. They will, most of them. Michael, would you recommend Robinhood for dividend stock trading? Now, Mitchell, I actually use Robinhood. Now, remember I said I got 7 accounts? Okay, 2 of them are on Robinhood. The rest of 5 are here on Thinkorswim. Okay, now if you ask me why do I have that many accounts? Because I don't trust the government. Okay, I got 1 account frozen 2 weeks ago. I was like, fuck. And then I have to go through all this shit trying to get it unstuck. Yeah, so in the meantime, while you're trying to get it unstuck, you're not making any money. So that's why I have more than 1 account. Okay, yeah, it is a little bit more effort, but I got nothing else to do. I'm retired, so I got to find something fun. I find this to be fun. And I'm taking you guys along for the journey. Because don't get this the wrong way. Okay? I'm not really doing it for you guys. Really not. I'm doing it for my children and my grandchildren. Because at some point in time, I will not be here to answer their questions. So if they have a question, well, they're going to have a 2.5-hour video every single day for them to see exactly what Papa G did. Mike, I am new. Do you have your teaching on a website so I can study? Yes, I do. But better yet, for free, you can go right to YouTube. Every single video I've done is on YouTube. There's over 700 of them. Okay, so right now, this is being recorded. So if there's something here you like and you want to see again, I put 500 in an account and I have made $200 so far. Well, alrighty then. Cool beans. Good for you. All right? But consistency. All right? Keep doing it consistently, and eventually you get to a point where you can tell your boss, you can take this job and shove it. I ain't working here no more. Okay, Dugga wants to take a look at ExxonMobil. All right, ExxonMobil, interesting. Take a look at the charts, kind of interesting. Here's our high, here's our low, here's where it was a year ago, here's where it is now. Well, where is it going? Up, down, sideways, up, down, and then what's going on here? Yes, you work at Walmart. Well, good for you. I'm learning buying long and I understand it well, but I still don't get what you do exactly. Okay. You don't understand what I do exactly. You didn't understand those 2 examples I gave you? Okay, if you have an old car in the backyard, you bring it out front, put a for sale sign on it, someone comes by and say, hey, I'll take it, let me give you a couple of bucks, hold it for me until Friday. You don't understand that? When Friday comes, they either come back and give you the rest of the money for the car, and if they don't come back, well, you sell it to somebody else the next week. You don't understand that? Well, this is the same thing. You're buying the stock. Okay, I am buying the stock at the current price. I am turning around and I am selling it to somebody else at the exact same price. What are your returns like this week? Hold on. Oh, okay, didn't hear that. So I'm selling to someone else for the exact same price. I paid for it. They are giving me a premium. The premium is what I'm looking for. I'm not looking for the dividend. I'm not looking for the capital appreciation. If the premium is higher than 1%, then I'll do the trade if everything else works. So if you just sit back, relax, I am going to do a few sampled trades, okay, just to show you how it works. And I will do some creative mathematics. Actually, it's elementary. It's been a long day. Do you also get dividends as a plus sometimes? Okay, now Saffron, sometimes I do collect dividends. I prefer not to, because when I showed you the calendar right here, okay, when I showed you the calendar right here, okay, I say, all right, let's take a look at, okay, Lowe's right here on the 22nd. Okay, can you see the calendar on the 22nd Lowe's? I would like to buy it 2 weeks before on a Monday, which was the 6th. That gives it 3 weeks for it to go up. If it doesn't hit my target there, well, I keep that money. I do it again here. If it doesn't hit my target Friday, I keep that money. I do it one more time here. If it doesn't hit my target, I keep that money and I collect the dividend. I don't really want to collect the dividend. No offense here, guys, but listen more, talk less. Thank you, Michael. Someone besides me had to say it. You know, simple. I like questions. I like interaction. But usually, that's like when you go to a movie. It's like, oh, who killed him? Well, chill. The movie will unfold as the night goes on. So all your questions will be answered as the night progresses. Okay, now at 11:15, I'm going to stop looking at stocks and I'm just going to answer questions. Okay, so I'm going to take the questions as they come, but for the last 15, 20 minutes, it's questions only. All right, so let's keep on going. So yeah, I take all my stocks that I like, all the companies I like, I throw them into the calendar. The calendar tells me when to look at them. That's it. It's that simple. Okay, now tomorrow is the 10th. All right? Which means I'll be looking at these stocks next. EOG, Abbott Labs, FCX, blah, blah, blah. That's it. And then next week I'll be looking at those. And then next week I'll be looking at those. So on and so forth. All the stocks I have are in calendars. And I have a whole bunch of lists. That's not my only list. See right here? Personal list right there. Okay, here's my list. Okay, 100-year-old companies. So I got a list of companies that are over 100 years old. Flock Queen, how are you today? Have you... you have to hang out a few nights, and it makes sense. I'm on month number 2 with this strategy. Flock Queen, you were going to send me your number, and I was going to chat with you, because I want to hear how some of those trades are coming along for you. Now, if you put your phone number here on YouTube, don't. You're actually going to send it to my email address, and my email address is there somewhere. All right. So, 100-year-old companies, calendar spreads. Don't ask me. I'm not even about to explain. Okay, some of these trading strategies, I'm not going to explain them. I only give away for free one strategy. And if 50% a year is not enough for you, then you're in the wrong place. Okay? Dividend champions, dividend aristocrats, dividend kings, dividend contenders, Warren Buffett's list. Okay, these are all my lists right here. So when I click on any one of these... Oh, that's right there. Let's try it. Warren Buffett's list. Warren Buffett's list. Right there. That's Warren Buffett's list. My list is a little different than his. Okay, he has some stocks that don't pay dividends. Well, all mine do. All right, that being said, let's get back to where we were. ExxonMobil. Now, ExxonMobil, I'm going to have to pass on it this week only because let's zoom on in and take a look at the last 30 days. Okay, now, here's your last 30 days for ExxonMobil. 30 days ago it was at 114. Here's your profit taking. Profit taking finds a new bottom right there 2 weeks ago, and then she shoots on up. And then what happened the other day? Profit taking. People start taking profits and the stock drops. That's what happens. So the stock is going to drop a little bit more. It will turn around just like it did 2 weeks ago. Okay, stock goes up, people take profits, stock comes down. Right? So let's keep on moving. That was ExxonMobil. Sorry, Dugga. It's not a yes for this week. Andrew Taylor, how are you today? Taylor Wright, how are you? ARB. We are to look at Dover. CAD. KAD2A. Can you start with $5,000? Sure you can. Thoughts on Nike? Ooh, Noah. I like Nike. Happy days. Um, Happy days. I want you to listen closely for a second. I only invest in companies that have 2 decades of increased dividends and weekly options. So I'm sorry if I say I've never heard of that company. Dollar General, well, that's on my list. Dollar General. And I believe there's actually Dollar General in my stable somewhere. All right, Nike. Well, let's take a look at Nike. NKE. All right, I'm going to say no to Nike also. Same thing. Look what happened. Now, don't get me wrong. I love Nike. I have bought Nike a couple of times this year. But you always have to keep in mind a couple of major things. Number one is, does it make sense? That's the number one. Number two, you can't fight the trend. If the trend is going down, well, you just sit and wait. It's kind of like fishing. You throw your line out there, you wait until it hits the bottom, turns around, and goes back up again. Okay? You may have to wait a day, you may have to wait a week. You just have to wait if you like Nike. And then you double check. What am I buying it for? 71.50. Well, what's the 71.50 going for? Well, the 71 is going for 125. Well, that's over 1%. Okay? The 72, it's going from 74 to 85. That's over 1% also. So both of the numbers work, but it hasn't stopped falling yet. See the chart? It hasn't stopped falling yet. So as soon as it falls, hits the bottom, turns around, goes back up again, that's the perfect time to jump in. Alrighty, so let's keep on keeping on. Thank you, teacher. Never try catching a falling knife. Yep, stick it with... Ooh. CJ, dude, I haven't heard from you in a couple of weeks. Where have you been? CJ wants to look at Starbucks. Okay, CJ, I wrote it down. We'll take a gander at it. Joe, what's happening? Yvette, how are you doing? Blue Heron Landscape, back again. Now, I remember Blue Heron Landscaping from a while ago. Roll the tide, brother. Way to go. All right, let's keep on. What else do we got? All right, Bobby. I get it like it was. Where should I start? Kata, how are you today? Return favor, please. Rob, I'm kind of curious. What do you mean by return favor, please? Not quite sure what I'm getting myself into if I say okay. So, Kata, where do you get started? Just up in the bio, okay? Right, where is it? Right there, right in the bio where it says Dividend Stock Talk. My little picture there. Click on that. That's my bio. Send me a link send me your phone number. I'll give you a buzz because this is not for everyone. This is slow. This is boring. It's monotonous. Oh, yeah. No, I don't do that, dude. I have way too much crap going on in my life. Way too much. So, Kata, yeah, up here in the bio, you'll get all the information on me. My phone number's in there somewhere for those who dig deep enough. What stock should I day trade tomorrow? So, Michael, you're in the wrong place. I don't do day trading. Sorry. Big Marty, what's happening? Oh, shit, Marty. You lost 35,000 quantum stock this week. I need to join your calls on Monday. Big Marty, dude, I feel bad for you. Quantum, give me this ticker symbol. I'm kind of curious. I want to say, what enticed you to jump into quantum? Well, I've never heard of it, so I know they're not 20 years or older, and 20 years of increased dividends. Ooh, Flock Queen wants to take a look at Albemarle, ALB. Oh, okay. NVIDIA CEO wrecked quantum stocks. I have no idea about that. All right, so let's keep on going. Albemarle, here's a high, here's the low, here's where it was, here's where it is. Look at the movement. Down, sideways, down, up, down. Well, that don't look good. Let's take a closer look. All right, a year ago, Albemarle's at 134. topped out in the beginning of March. 142.06. That's a top for Able-Mal. From there, look at the bottom. That's like way down here in the middle of August at 72. Look at the run-up from August. August, isn't that lovely? Here's the high right here, right around 115. Then she just tanks. All right. Oh, here's something you might find interesting. This is a little interesting. Now, somebody once explained to me the stock market in this manner, okay? Bears go up the stairs. Okay, see that? Bears go up the stairs. Bulls jump out the window. See that? See how long it took to go from here up to here? But look how quick it dropped. Bears go up the stairs, bulls jump out the window. It's what it is. La 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 la. All right, here's the high right here. The high for Able-Mal is 113.91. Drops down to here. Okay, here's your 30-day high right here. Here's your 30-day bottom right here. Goes up with a gap right here. Yep. Didn't have 2 days, because it's 2 days to the upside. But the third day where I normally jump in, see, I look for 2 days to the upside. Here's your bottom right here on the 2nd, which was Monday. And then you get Tuesday. No. Back up. This was Thursday. This was Friday. Then it gaps up on Monday. 2 days to the upside. The third day was where I usually jump in. No, it went back down again. So this is not quite the bottom because I don't have 2 days to the upside. One thing I dislike about YouTube. James, have you ever traded through a bear market that lasted more than 6 months? Well, absolutely. Hey, satisfying slide time. I haven't seen you in a while. Nice to have you back. Okay, now remember, I've been trading since the 90s. I started trading when it was $250 commissions. $250 for commissions. Okay, you guys got it easy. It's like 0 commissions nowadays. You just got to pay the exchange fees. Okay, so it's easy. For me, when I started, yeah, it was awesome when it went from 250 down to 125. I thought, great, I can make more money. Yeah. Okay, then it went from 125 to like 79, then it went to 49, then it went to 39, then 29 to 19 to 7 to 5. Now almost all the trades are free, but you pay commissions. I'm not commissions, sorry. You pay exchange fees. Like, what is it, 15 cents each time you trade? Hell of a lot different than $150 a trade. Wow. Anyway, I think it was 250. Anyway, let's keep on moving. Joe, Clapper, Ross, Preach, Mr. Rod, what's happening? Rebecca wants to look at DTE. Now, Rebecca, I'm going to ask you, what the hell is DTE? DTE Energy. Oh, Rebecca, DTE Energy is a monthly. Now, you know how you can tell the difference between a monthly option and a weekly option? Rebecca, you ready? Over here, where it says 17 January, the very next option is 21 February. And then the next one is 17 April. Well, those are all months, okay? But look at AT&T. 10 January, 17 January, 24 January, 31 January. These are weeklies. Weeklies work great because it gives me 5 days. Well, it's easy to figure out, okay, where's the stock going to be in 5 days? Well, that's easy. Monthly, where's the stock going to be in 30 days? Yeah, it's not that easy. Okay? Let's keep on going. Keep on keeping on. 842024. What's happening? All right, let's keep on going. Sarah. I am Goofy. Cool name, dude. IB Social. All right. Tingleberries. Good for you. Thanks, Caleb. Jerome, Jonathan, Scotland, Jerome, Mike, you find that funny. Ivan thinks it's funny too. All right, let's keep on. You guys got to come up with more stocks. All right, you guys can't find anything? I'm going to pull something out of my ass. Okay, Mitchell, yeah. DM me with your phone number. I'll give you a buzz because it's not for everyone. What's he thinking? I'm going to ask the same question. What the hell are you thinking? Small capper. Bro, suggest me a stock that will gives me dividends like $3,000 every quarter if I invest $1 million. And the stock should be good in the long run. Well, I'd love to help you out. Now, from what you're saying, it's easily doable. Now, from what you're saying, okay, $1 million should give you $10,000 every week. But you're only looking for $3,000 every quarter. Well, what you're asking me to do is something that I don't do. So I really can't give you an answer to that. And secondly, I know nothing at all about you, so I can't give you any suggestions. So I always tell people, if you really want to talk to me, listen closely. If you really want to talk to me, send me your number. I will give you a call. If you get a text, a post, an Instagram, any kind of communication whatsoever from me saying it's me, yeah, it ain't me. Okay? I'm so old school, I don't communicate any other way other than the phone. You want to talk to me? I will call you. Send me a number, I will call you back. Okay? Test it out. Let's see. We got like a couple hundred people here tonight. I want to see who actually going to send me their number so I can give them a call tomorrow. Usually, it's only like 1 or 2 people a night. The funny thing is, about 8,000 people will come through here throughout the night. So throughout the night, you will see the numbers as they get higher and higher and higher. So at this moment in time, 3,200 people have already come and gone. They come and they go. They come and they go. So what I'm telling you, you really want to talk to me, send me your number. I'll give you a call. DNY, Suboy. What the heck is Suboy? SU. What the heck is SU? Oh, Suncor. Oh, I like Suncor. All right. However, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, sideways, down, and then up again. This is definitely going to be a no. Now, I can tell by looking at it and the reason why it's going to be a no. So hold tight. Let me show you. So as nice as it looks, let's look at the last 30 days. Now, the reason why I want to look at the last 30 days, because the last 30 days shows me what are we thinking. That's me and you. Because we are the buyers, we are the sellers. We're the ones who create this crap. We say when it's too high, we say when it's too low. Okay? Now, 30 days ago we're here, she drops down, shoots back up. Mike Thompson, hold on a second. Okay? 30 days ago we're at 38. Then she drops down to 34. Look, here's the bottom. 2 weeks ago, it turns around and goes back up again. That's all stocks do. They go up, they go down. They go up, they go down. So if by chance you are waiting patiently on your doorstep for a stock to show up, take the dog for a walk, or mow the lawn, rake the leaves, trim the hedges, maybe make the bed and do the dishes. No, they don't do that. They go up, they go down, that's it. Okay? So, Suncor, the reason why I don't like it this week, and it's just this week, that's it. Because here's their high, the previous 30-day high. And then she drops, here's your bottom, then she shoots up. So here's a question for you. Listen closely. The bottom is here at 34. So from 34 to 38.50. Okay? That is only $4. Okay? 34 to 38.50. It's only $4. But $4 on a $34 stock, well, that's over 12%. 12% increase in 2 weeks. So ask yourself a question. If you made 12% on your profit in 2 weeks, don't you think you should be taking a profit? Because the funny thing about profits, they're not really a profit until you take it. Okay? And nobody ever went broke taking profits. Alice, how are you doing over there? Okay, nobody ever went broke taking profits. So don't be afraid to take your profit. If you bought it at 34 and it shoots up to 38 and you don't take your profits and it comes back down again, well, that's your own damn fault. It's not a profit until you take it. Take the profits, say thank you very much. I will see you when the next setup is. Because if you like the company, you'll keep buying it. I buy the same stocks over and over and over again. As a matter of fact, let's do this just for the fun of it. Let's go back to here, okay? Here's all the stocks that I bought last year. I'm going to go all the way back to week number 1, 2024, all right? Here's week 27, week 20, week 14, week 9, week 2, week 1. Here we go. You ready? Listen closely, okay? CVS, Ford, General Motors, Macy's. Clorox, Ford, General Motors, Lowe's, Macy's. Clorox, Capital One Finance, Ford, General Motors, Macy's. Okay, General Motors, Macy's, Ford, Capital One Finance, Clorox. Ford, General Motors, Macy's, Target. Okay, Emerson Key, Macy's, 3M. Key, Macy's, 3M. Macy's, 3M, MOS. Do you notice that I buy Macy's almost every single week? Well, why do you think that is? I mean, you can keep going. This is week number 8. All right, we can go all the way up. Week 17, Albemarle, JD, Macy's. Week 18, Albemarle, JD, Macy's. Week 27, Kohl's, Dell, MPW, Walgreens. All right. Okay, Kohl's, Series, Walgreens, Macy's, MPW. If you go through all my trades, you will see that I buy Macy's all the time because it's consistently profitable for me. Okay, I like getting 1, 2, 3% every single week from Macy's. I got no problem with it. Mitch Hammer, how are you today? All right, let's keep on going. Cool. Mike Thompson, oh my, I thought we have been talking on your email to you. And so glad you told me that it was not you. No, dude, it's not. Okay? I don't communicate with people with email. I don't communicate. Now, I will communicate on TikTok if you give me your phone number and I call you. Okay? See, I'm old school. I actually like calling and talking to people on the phone. Because you can hear me and you know who I sound like. Oh, you know what I sound like, all right? And I like to hear exactly what people are looking for, all right? Sorry about that, Mike. As far as I know, last I checked, there was about 28, 29 people pretending to be me. Misty. Okay, Mike wants to take a look at Misty. Okay, Mike, I'm going to say no to MSTY, and the reason being, Mike, is because MSTY doesn't fit. 20 years of consistent dividend increases and weekly options. It's a yes, no. It's not, oh, well, maybe you'll like it. No. I sent you my number on Instagram. I don't have Instagram. Okay? So here's the funny thing is, you're going to get people from Instagram. You're going to get people from Telegram. You're going to get people from, wait a minute, Instagram. Yeah, I do have Instagram. But it's the 10-minute trader on Instagram. Anyway, let's keep on going. Arithmetic, never heard of it. Okay, DNY, Suncor. So, now, don't get me wrong, I like Suncor. I do, really, sincerely. But here's your bottom here. You have a nice return, a nice upward trend. Sell it, you take your profit. Now, I'm not telling you what to do. I don't ever tell anybody what to do. Okay, I buy and I get rid of everything for 1%. So if it jumps from here to here, you bet your ass I'm getting rid of it. I'm not looking to marry something. I'm not. I don't want to buy it and hold it for the rest of my life. No, I want to put it to work. I want to have a consistent weekly cash flow from my money. Okay, Bearman, meme coins, no. Bearman, MCS. What the heck is MCS? MCS going to be a no. Okay. Why do the trees enjoy a bend westward? I have no idea. Okay. Okay, here we go. Yeah, monthly. No. XRP, really, sweet goat. Weren't you paying attention? XRP is not a dividend stock. Simone is in the house. Woohoo! Yeah, Mortimer. Nike's not doing very well. I hear what you're saying. AT&T, dude, we were just looking at AT&T a while ago. Look at the numbers way up here, and it pulls back, and it's actually falling. Catch me now, I'm falling. All right, here it is. See, here's the high. It's dropping, dropping, dropping. Now, AT&T would be great once it finds its bottom. Will that be this week? Probably not. It'll probably be next week or the week after. Because here's your high. And there's going to be profit taking. And when the profit taking is done, she'll probably turn around and go back up again. Because that's what stocks do. They go up, they go down. Looks like Nike has support at 70. Where Tesla going tomorrow? Don't know, don't care. Nick, apparently you weren't listening. Tesla has no dividends. Tesla is a no. ENB killing it with 7% dividends. Okay, Big Brain 338. Okay, it sounds like you're in the wrong place because you're talking about annual return of 7% being a good thing. Okay, just by the sentence you're giving me. ENB still killing it with 7%. 7%? Seriously? I'm showing you how to get 1% a week. 1% a week, well, at the end of the year, that's over 50%. And you're excited about 7? I don't know. I think you'd be more disappointed with 7. Oh boy, somebody wants to take a look at the S&P. SP stock? What the heck is SP? Well, that's a no. Okay, S&P. Look, SP. SP plus corporation. Yeah, no. No. ENB is a monthly. You're absolutely correct. Especially with a target of $63. ENB is Good morning, Paul, and how are you today? Okay, what do we got? Big Marty. The ticker I lost money on was RGTI. Oh my goodness. Big Marty, hold on a second. RGTI. Rigetti. Rigetti spaghetti. Holy shit. Dude, seriously, what are you thinking? Steve, can you pull up a seasonality chart on the trading program you're on? Steve, yes, I will in 1 second. Hold on a minute. Marty, Big Marty. Dude, what were you thinking? Look at this. Okay, it was at $1 back in November, September, October, November. It was at $1. Then she shoots up to 22. Have you ever heard of the pump and dump? Leo, Bank of America. No, we haven't done Bank of America yet. Give us a minute. We'll take a look. So, Big Marty, have you ever heard of the pump and dump? The pump and dump is when people take a stock like this and they just blast out. They pump out a whole bunch of social media saying, oh, this company's great, this company's wonderful, this company's going to do this company's going to do that, this company's going to do this. And then it goes from $1, shoots up to 22, and when it hits 22, what do you think they do with it? They dump it and they move on to the next one. And I feel bad, Marty, that you actually fell for that. Seriously, I do. Okay? Now, I got sucked into one of those about 15, 20 years ago, so, we're in the same boat. However, I didn't put in 35,000. Okay? Mine was more like, I think it was only like 1,200. But still, not the point. All right? So, Big Marty, what I do here, okay? I don't look for this. Okay? This will work out maybe once or twice in your lifetime. Maybe once or twice in your lifetime. But here's the thing. Okay, Ford, General Motors, AIG, Wells Fargo, Bank of America, Colgate-Palmolive, Stanley Black & Decker, Clorox, all these companies have been in business for over 100 years. And each and every one of those companies consistently increases their dividend. Why I like dividend stocks? Because by looking at just the dividend and how consistently and how many years consistently it goes up, tells me just how profitable the company is and how consistently profitable it is. All right. I'm going to write down BAC. All right. It is 10:30, which means we got 45 minutes to look at about 15 stocks. Okay. Bank of America's on the list. We'll take a look at it. So, Big Marty, how do you join? You come up over here to the, what do you call it? The bio up here. Okay, see my little pretty little face right there in the top left corner. You click on that, and that will show you a DM where you can actually send me a message. Send me a message here, Marty. I will give you a buzz. Okay, drop me your phone number here. I will give you a call. Now, I promise you guys, I'm not going to try to sell anyone anything, so let's just keep on moving along. All right? Sorry about that, Marty. La 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 la. CP, when stockbrokers wore ties and trades were made over the phone, actual phone calls. Yes, CP, you're absolutely right. What do I think of junk? The name alone tells you exactly what I think of it. JNK. Well, now that's interesting. Spider, Bloomberg, Barclay High Yield Bond ETF. I'm going to say no. All right? Now, the reason I'm going to say no is look at the premiums. The 95 is going from 0 to 150. The 95.50 is going 0 to 270. Well, for the fun of it, let's go to Yahoo Finance and see how wonderful this company actually pays its dividends. Okay, now you got to find yourselves, JNK, you got to find yourselves a good reference or a good source for financial information. I get all my financial information from Yahoo Finance. So here we are. Spider Bloomberg High Yield Bond ETF, junk, JUNK, JNK. All right, let's go all the way back to the beginning. Oh, look at this, and they pay monthly. Interesting. Alrighty then. Now, I might let something like this slide because they've been paying dividends since 2007. Now, from 2007 to 2025, well, it's not quite 20 years. What is it, 18 years? That's pretty good, right? But wait, let's see exactly what these dividends look like. To be 100% honest with you, I never looked at it before. Seriously. Never looked at it. Why? Well, because it doesn't have 20 years of profits. But yeah wants to take a look at it. You ready? Now, I'm going to rattle these off, and then you let me know if it's a good one or not, right? The very first dividend was $1.06, 106. And it drops. Well, that's not a good sign. It drops to 91. 92, 109, 109, 101, that's backwards. 107, 106, backwards. 104, backwards. 107, 109, 113, 111, backwards. 107, backwards. 122, 136, 124, backwards. 123, backwards. 120, backwards. What the hell are we doing here? Seriously, yeah? Okay, yeah? Yeah. Okay, no, and double no. The reason being, if they're not consistently profitable, why the hell are you putting your money into it? Think about it. If you're going to invest your money, your brother-in-law Steve, okay, Mr. Steve, hey, you want to do a new adventure? Sure, here you go. You didn't make any profits? Then no, you ain't getting my money anymore. It's actually that simple. Why would you put your money into a company that one step forward, two steps back, two steps forward, one step back, three steps forward, two steps back? Why the hell are you doing that? IONQ. Brandon, seriously, dude. Take a look. Seriously. Take the exact same thing. IONQ. Take a look at the numbers. And then come back to me. Okay, I already know what it's doing. Okay, I already know what it did. So why the hell are you putting money into something that's not consistently profitable? It boggles my mind why you people do this stuff. Ablobos, you teach one-on-one or one groups? Yeah, I do teach one-on-ones and I teach in groups. Okay, all the information is in the bio. I said I'm not going to try to sell anyone here anything, so I'm not going to do that. So if you want to look, and those there are, believe it or not, for those of you who want the information, you'll look. It's right up there. Okay, you just follow the yellow brick road. That would be cool. I should do that. I should create a little yellow brick road on my website. Follow the yellow brick road. Okay, anyway. Social click music. PDAI. What the heck is PDAI? PDAI. Well, let's see how wonderful they are. It doesn't look like a stock there, dude. PDAI. Can't find that symbol. Sorry, dude, look. Can't find that symbol. Nokia and OK. Well, see, you can find that symbol and OK. All right, the high, the low. Where was it? Where is it? What direction is it going? Unfortunately, Nokia is going to be a no. Sorry. The reason why, look at your last 30 days. Here's your last 30 days. Up, down, here's your 30-day bottom right here. Shoots up, even has a gap. Okay, now it's starting to pull back. Once it pulls back, well then yeah, jump into it then. I'm out of my tea. Okay, Alpha Rumble. No, it's not 20 years old. Sorry, I'm not even going to waste my time with it. All right. Is that MAQ, Mark? YMAX. Hell no. YMAG double hell no. Now, the reason why I'm saying no to these is they have not been around for 20 years. If you're going to invest your money, okay, if you're working 30, 40, 60, 80 hours every single week and you're looking forward to retiring, why would you do it with a company that's not consistently profitable? Okay, Alf, I heard you. I pulled up Ford. Hold tight. We'll take a look at it. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, big drop, up, sideways, drop. It's at 974. Okay? 974 for Ford. The company's over 100 years old. They're not going anywhere. All right? So, the 974, if I buy it tomorrow, I can sell somebody who writes to buy it at 10, and the 10 is going between 9 and 10. Well, that's over 1%. Now, remember I said I was going to do a sample? Well, let's do a sample with Ford. Just for those that you are new to see how it works. Okay? So, let's get rid of that. We're going to change from single and go to covered. Now, what covered means is I'm buying the stock first, and then I'm selling the option for someone to buy it from me for the same amount of money I just paid for it. VFO. It's a weird name, but okay. So let's take a look at Ford. Now, 974. Remember, I like the 9s. Oh, hell, let's do the 982s. That's even closer. 982. How the hell did they come up with a number 982? All right, so we're going to do the 982s. Do just one contract. Okay. Right over here. Here's the trade down here. I'm changing it to 1 over here. Then I'm going to change this over here, the order, from a limit to a market. Now, the reason why I'm changing it to a market order You got it? One up? The reason why I'm changing it from a limit order to a market order is because when you're doing a covered call, specifically with Think or Swim, the stock and the option are tied together. So I want to buy the stock and sell the option at the exact same time. Now, remember when I said simple, safe, predictable? Well, predictable, I know exactly what I'm making before I even do it. Unlike traditionally, you buy a stock and you wait for it to go up. No, I know what my profit's going to be before I even do it. Okay? And I'm going to read all the numbers and I'll see if it makes sense. You ready? Buy one covered call of Ford 100s. Those are the weeklies. 17 January 25. Well, that's next Friday. I don't want to do tomorrow because there is not enough time value. So I want to do next Friday. So next Friday is 17 January 25. The 982 is the call strike. Now, that's a weird number. Every once in a while, you'll get a weird number. Okay, it works for me. The 982 call on the Ford stock at the market to open. So that's the order that gets filled tomorrow. Now, let's take a look at the rest of the order, because the rest of the order is going to give me some really cool information. You ready? Cool information number one. Break even stock prices. Well, what does that mean? What it means basically and simply, if on Friday, the 17th of January, if I start the spreadsheet, what are some of the parameters I should keep record on my investments? Steve, believe it or not, Steve, I have a Discord, and in the Discord, there's a whole bunch of people in there that just love spreadsheets, and they actually have them all set up. But what you want to keep in mind is date, what you bought it for, what you sold it for, what premium you collected, what kind of percentage it was, okay, what fees you had to pay. You could do it that way, or you can just let Think or Swim do it for you at the end of the year, get an end of the year report. You can do it that way, but some people like doing spreadsheets, okay? But keep track of what do you buy, when did you buy it, what was the price, what strike price did you sell against it, how much did you make, what was the return, did it get filled, did you move it forward, what were the fees involved, stuff like that. All right, so buy one covered call, Ford 100, 17 January 2025, the 982 call over the stock Ford at the market to open. Okay, break even is $9.57. Now, what does that mean? $9.57, $9.57. Well, the stock at this moment in time is at $9.74. That's my break even. As long as the stock is above, you got it, Tim. As long as the stock is above $9.57 come Friday at 3:59 p.m., anything over this number, $9.57, is going to be a profit. Ideally, I want it to be over the strike price, and that's $9.82. Well, it's currently $9.74. That's pretty damn close. I've learned Robinhood can be expensive. You learned the hard way, didn't you? All right. Okay, here we are right here. Sorry, I'm just adjusting the questions. All right, you ready? The maximum profit for this trade. Remember when I said simple, safe, predictable? I know what I'm getting before I even do it. I'm going to bring up my calculator. Bring it over here so everyone can see it. Clear that mess out of there. Now, to figure out the rate of return in which you are getting, with this one particular trade, you're going to take the profit right here, $24.50. That's the profit. Okay? So I put that into the calculator first, $24.50. Then I divided by how much did it cost me to do this trade. Well, anytime you're doing a covered call, you need to have 100 shares of the stock before you can sell one contract. So 100 shares The cost of the trade, including commissions, $958. So $24.50 divided by $958. That gives me a rate of return of 2.55%. See that? 2.55% for 1 week. Do you have any idea what 2.5% is for the week? That's 125% for the year. 125% for the year. For Ford. So I'm buying Ford at the current price. I'm selling it to somebody else at a tiny bit more than I just paid for it. I'm collecting $24.50 per contract. Okay, and each contract is costing me $958. But wait, it gets better. It does, really. Watch this. It gets better. Now, the numbers I'm showing you is for an all-cash account. Now, all-cash means you buy all cash. I'm going to show you what the return is if you have a margin account. Well, what's a margin account? A margin account is you put up $1, and then the broker will put up $1. So now you're trading with $2 and not just $1. So that means your profits double. Well, the longer you're in, the more experience you can get a 2-to-1. That means one of my dollars to 2 of the broker's dollars. And then when you get really good, really good, you can get a 5-to-1. One of my dollars to 5 of their dollars. But you got to be really good, and you got to be really good. Okay, do you trade Warren Buffett's holdings? Yes, I do. That's list number 5. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Okay, so 2.55 if it was all cash. So the profit is still the exact same, $24.50, $24.50, but here's where the difference is. See this number right here where it says buying effect? Well, this here is a margin account, which means the amount of my own personal money I have at risk at this moment is $470. Well, at that, look at my rate of return for the week, 5.2% for the week. Can you imagine that? 5% a week? 5% a week is nuts. That's 200. Is that 250? Yeah, that's 250% per year at 5% a week. Well, that's crazy. All right, let's get out of that. Get out of that. Get out of this. Get out of this. Let's go back to here, and let's go back to here. So that was a sample trade. It's really not that difficult. Nokia, Coca-Cola. We already looked at Coca-Cola earlier. It's going to be a no. Can you teach price action? Yes, I can, but I'm not going to. Okay? I only teach one trading strategy for free and only one. And if 50% a year is not enough for you, I can't help you out. Okay? Okay, Yaya, really? I said no to the first one, and you want me to do a second one with you? H-Y-G. Yaya, I can tell you right now, I've never heard of it. Y. No, that's right. H-Y-G. H-Y-G. iShares Box High Yield Bond ETF. Dude, don't you listen at all. I don't think there's any ETFs that have been around for 20 years. HYG. Okay, yeah. Are you ready for this? Are you ready for this? Here we go. iShares iBox High Yield Corporate Bond ETF. Well, let's take a look at the dividends, all right? Now, these pay monthly also. I can already tell you right now it's going to be a no. They only go back to 2007. You ready? 29, 59, 60, 63. Well, that's a good start so far. 62, that's backwards. 65, 68, 64, backwards. 57, backwards. 66, 62, backwards. 64, 57, backwards. 63, 65, 66, 62, backwards. 69, 70, 52, backwards, 75, 72, backwards, 81, 59, backwards. Seriously, dude, do you even look at where the hell you're putting your money? Seriously. And why the hell would you think this is okay? Seriously. Why would you think this is okay? The company's not consistently profitable. Who's ever running it is not running it profitably. So why are you putting your money there? Big Marty, you sent me your number on Instagram. Did you really? Because I didn't get any messages on Instagram. Can I look up the option pricing on here? Hoth gonna run. Hoth? I never heard of it. H-O-T-H. H-O-T-H. Isn't that the ice planet in the outer realms? Okay. The real Mike. Okay, real Mike. Are you ready for this? Real Mike? There are no dividends in the time period selected. So, Mike, I'm going to ask you a question. Why on God's green earth would you show up to a party that says dividend investing and then ask the host to take a look at a non-dividend stock? It boggles my mind. What's wrong with some of you guys? You just don't listen. Okay, dividend investing for weekly cash flow. Hoth does not have dividends. That's going to be a no. Just wasted my time. Thank you very much. Substitute the ticker in the search field. Okay. Who's multitasking and watching Notre Dame Penn State? Well, that's one way to find out what the score is. Eric, XRP. Okay, Big Marty, do you take perfects? Do you take perfects every week? I'm going to hope you mean profits. Do I take profits every week? Yes, I do. Also, do you use margin? Yes, I do. Tim, Tide, T-I-E-D. Why am I looking that up, dude? Yeah, can't find that symbol. That's a no. Pedro. Moe Khan, how are you? Game score? Never heard of it. Sorry. James, to get a covered call in Costco, Visa, MasterCard, etc. needs big account. You're absolutely right. Costco's at $900. Yes, I have Instagram. Okay, my Instagram is the 10-minute trader. Oh, there's your answer for the Notre Dame game. It's tied at the moment. Did I miss TGL? I never even heard of TGL, Nikki. TGL. Treasure Global. Hell no. British Petroleum. Why can I always rely on a Gen Xer to come in with a good one? British Petroleum. Definitely yes on that one. Let's take a look. Hell no. He thinks that's funny. British Petroleum. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up. Well, that's freaking awesome. But is it really? Look what happened the very last day. We're going to zoom into it. Oh, hold on before we do. 31. Well, the 31's going for 61 cents. Well, that's over 2%. 2% a year. 2% a week is over 100% a year. Now, you should be excited at 2% a week. It's a simple, safe, predictable trade. Simple, safe, predictable trade. It's British Petroleum. Okay, they've been in business a very long time. They're a huge company. Yeah, I know they had a problem in the Gulf of Mexico. The stock dropped. They got slapped on the wrist. Now they're back to business. They cleaned up their mess. All right. A year ago, 35. Tops out in the middle of April at 40.37. Here's the bottom last 90 days. Check it out. Down, up, down, up. Unfortunately, it's going to be a no this week. Look at that. Somebody's going to be taking profits really soon. Or at least you should be. Okay, 30 days ago, we're at 30. We drop all the way down to 28. Now, from 28 to 32, that's $4. 28 to 42, that's over close to 15% in 2 weeks, 3 weeks. Okay, 15% in 3 weeks. Yeah, there's going to be profit taken. This thing's going to come back down. I'm going to write British Petroleum down in my notebook, not for this week, not for next week, but 2 weeks away. Because I think it's going to take 2 weeks to go from here down to here, turn around, go back up again. I love British Petroleum. I like to follow where they usually go. CP, Pedro, yep, almost 100,000 in one contract. Poor man's covered call would be cheaper. Yeah, it would be. Unfortunately, CP, Pedro, listen closely. The poor man's covered call works sometimes, not all the times, because here's the problem with the poor man's covered call. You're buying the option further out. You're selling the option that's close by. All right? Both of those are going to expire to zero at one point in time. Why not sell puts instead? Michael, don't get me wrong, Michael, I do that strategy, but not here. The reason why I don't do it here, it's this trading strategy I taught for my 9-year-old daughter. Okay, this is the exact same strategy I taught to her.
Hi, I'm JC, and as you being part of my internet website company, which my dad has let me go on that. Hi, I'm JC, and as you being part of my internet website company, which my dad has let me go on that. That's what I do. Being part of that, you're going to be getting weekly lists of stuff I'll be trading.
That's me, 15 years ago. I laugh every time I see that. If you sold puts, you would short the shares, the opposite. No, not necessarily. Okay, this is why I don't teach the puts. Puts here a little bit more complicated. When I say I created it for my 9-year-old, I just showed it to you. Okay, that's my 9-year-old daughter. Well, she's 11 here, but I first showed her when she was 9. Okay, the reason why you don't see it when she was 9 is because YouTube wasn't available when she was 9. All right, we didn't know how to do it back then. So, that being said, I forgot what the hell I was talking about. Shit. Don't get old. It's not as glamorous as people think it is. Don't get me wrong, it's fun to come and go as I please and do whatever the hell I want to do, whenever the hell I want to do it. But when I say the trading strategy I created for my 9-year-old, simple, safe, predictable, consistent, and no way for her to lose. So when you start talking puts, when you start talking implied volatility, when you start talking intrinsic value, when you start talking Black-Scholes pricing methods for standardized options, yeah, it gets confusing pretty quick for adults. Yeah, Mr. Premium, I get that, but I don't teach it here. Okay, I do a whole bunch of strategies, just not here. Here, one strategy. If you're not okay with 50% per year, I can't help you out. MPLX, joking? Are you kidding me? Seriously? Okay, so let's get back to British Petroleum. British Petroleum, yeah, I write it down for 2 weeks. It can take a while for it to come back down before it's time for me personally to jump in. So Brad wants to take a look. Oh, wait a second. Hold up for a second, Brad. Jokin 2126 wants to look at MPLX. I have no idea why. It's going to be a no. Lo and behold, it's a no. See, I looked. I respect everybody's opportunity for their opinion. Your opinion, MPLX, no. Okay? WDI is probably going to be the same thing. No options, no. Becca Makawa. Becca, I'm glad you're here. You're one of the nice people from the California group. Yeah, I'm not going to do that anymore. The people over there, just a lot of them, not all of them, a lot of them are rude. And I have no desire to deal with that kind of stuff, especially if I'm staying up until 3 o'clock in the morning just to help them out. But you're here. You're a nice person from the West Coast. Oh, boy, human. Walmart. Mitchell, why do you want to look at Walmart? WMT. See, look where Walmart is. Here's the high of the year. She pulls back. Now she's going to the upside. Okay, interesting. 91.85. I'll be looking at the 92s. The 92s are going for $1. Well, that's nice because it works out perfectly. Look, here's the high of the year. Okay, you got your profit taken out of the way. Now you get 2 days to the upside, but you have an additional 2 days. That's 4 days to the upside after the bottom. 30 days would be right about here. Okay, here's your 30 days. Okay, 30 days ago, right here. Then she drops. Here's the bottom, retrace back down. Here's a new bottom right here. 1, 2, 3, 4 days to the upside. Okay, 91.85. The closest strike price is going to be the 92. So let's do a 92. Okay, G Money, best Roth IRA tips. If your Roth IRA is not making you a certain amount of money, allowing you to put the stocks where you want them, change it. Human, please tell for Tesla. Okay, this is what I'm going to tell you about Tesla. You ready? Tesla, TSLA. That's stock symbol, TSLA. Hell no. No dividends, no thank you. You're not going to share your profits. I want nothing to do with you. Simple, right? Thank you, Mr. Mitchell. All right, so here's Wally World. So let's do a practice run on Wally World. Remember, I started to look at more than one. Okay, let's get this out of the way. We're going to look at the 92s. Here's the 92 right here. First of all, I got to change it to a covered call. Covered. There we go. 92 right here. Okay, let's do just one contract. Just one at the market because I want it filled instantaneously first thing in the morning. Here's what it sounds. You ready? Buy one covered call, Walmart, WMT, 100. That's the weeklies. 17 January 25. That means it expires next Friday. The 92 call option against the stock, WMT, Walmart, at the market open for tomorrow. This is orders for tomorrow. Okay. Here's my break even, $90.78. Well, currently the stock is at $91.85. So as long as she stays where she is or goes up, I'm good. Okay, so my profit is $121.50 per contract. So let's get the calculator again. Clear that entry. Profit right here, $121.50. $121.50. How much is this trade costing me? Well, this trade's costing me $9,000. $9,079. Well, that's going to be a 1.33% return. 1.33. Didn't we look at Ford a little while ago, and Ford was getting like 3 to 5% on a $900 investment? So here's where it boggles my mind sometimes. Some people want to buy companies like Eli Lilly or Costco, $800 a share, $900 a share. Well, I'm only looking for 1% a week. Now, I could jump into Walmart. Okay, one contract in Walmart is going to be $9,000, but I'm only making 1.33%. The Ford's trade we did a little while ago. Remember we did Ford a little while ago? That was paying 3%, and I'm only putting up $900. So ask yourself a question. Would I prefer to do Ford and collect 3%? Or do I want to do Walmart and collect 1.3%? I got to put up $9,000. So let's say hypothetically, you take that $9,000 and you put it into Ford. Well, you could do 9 contracts on Ford and still collect a shitload more than $121. As a matter of fact, just for the fun of it, let's do it. Let's take that $9,000 right here. at the 1.13%. And let's just dump it into Ford and see what it looks like. Because remember, we found Ford earlier, and everything looked good. All right, so let's get out of there. Let's change this to Ford. Okay, let's get out of this one. Now, currently the Ford's at 974, so let's do that 982 because that's the closest one. Okay, now confirm and send. There's $9,000 right there. Okay, so at the current price, WBA was earnings tomorrow. Yes, earnings tomorrow for Walgreens. Don't know. Dip or rip. We won't know until 9 o'clock tomorrow morning when the earnings report comes out. Now, I do have Walgreens, so that could be an issue. But let's stay focused onto Ford. Now, remember, we were going to get how much were we getting? Hold on. All right. We were getting $121 from Walmart to do one contract, and it was costing us $9,000, okay? $9,000. So can anybody remember that? $9,000, $121 profit. So this time, we're going to take that same $9,000 and put it into Ford. Okay? So $9,000 into Ford, well, that's 10 contracts. At the market, okay, here it goes. By 10 covered calls of Ford 100s, okay, 17 January 25, 982 call option on Ford, okay, the maximum profit, 241. Well, how much is it costing me? It cost me $9,500. Well, that's almost, okay, the maximum profit, 245, 9,000, or put it into Walmart, 9,000 at 121. Doesn't seem fair, does it? Ford, you get twice as much for the same amount of money. Okay, Walmart, not so much. But you still get 1.33% on Walmart. Okay. 107. We're going to look at a couple more stocks, and then we're going to call it a night. I'm just going to answer questions at 11:15. So, DVM we looked at, IBM we looked at, WBA. Let's take a quick look at WBA. Let's get out of here. All the way back to the beginning, and here we are. All right, let's see how quick we can go through these before we go to questions. DKG302. Evening, James. I think my X stocks is called away this week. 31.18 cost, basic 32.5 strike. Got a 3.3, 3.1. Cool beans. Yeah, more than likely you got called away on that one, dude. But nice. BOA. Are you talking about Bank of America? BOA? BOA, Bank of America, is actually BAC, Bank of America. BAC is Bank of America. Okay? All right. Let's see how quick we can do these. Okay, INTC, Intel. Somebody want to take a look at Intel? Okay, nope. 2 down days in a row. See that right here? Starting to come down? No. WBA. Okay, here's the bottom from WBA here. Here's your top. Came down. Now it's going sideways. No real direction there. Wall Street is moving to crypto. Let's move on it. Yeah, not yet. Not until crypto has a safe, predictable, consistent way of getting 1% every week without having to sit in front of my computer. Look, my hair looks terrible. Yes, I know, I'm vain. Leave me alone. Anyway, Kroger, KR. Okay, we're going to say no to Kroger, not because I don't like it, but because she's in a pullback right now. See, here's your high right here. Now she's down here. Okay, so as soon as she turns around and goes back up, see, kind of like it did here, look. Up, here's the high, drop down, here's the bottom, turns around, goes up. Okay, drops down, turns around, goes up, drops down. Here we are now, waiting for it to turn around, go back up again. So I'm going to put Kroger down for next week, because that should be sometime next week. Coca-Cola's next. Oh, now Coca-Cola looks interesting. Okay? First, before we do anything, high, low, where was it? Where is it? Where's the direction? Up, down. Well, cool beans. Let's check it out. It's currently at 61.64, so I'll be looking at the 62s. The 62s are going 51 to 61, not quite 1%. So that is going to be based on your decision, because you're not getting 1%, but it is Coca-Cola, and look at where it is. Here's the high here, it drops here, now she's turning around and going back up. Now it's the time to jump into Coca-Cola. Okay, 30-day high, 30-day bottom. Now she's going up. This is what I look for. Okay, now I can't tell you guys what to do, but this is what I look for. 30-day high, 30-day bottom, turn around, going back up again. Explosive shouldn't be edible. I'm not quite sure what that means, but okay. So DKG, that sounds interesting. Okay, X. 30 days key, take notes. Yeah, I don't do anything for 30 days, brother. It's got to be 5 days. I want to be in on Monday, out on Friday. All right, Stephen? In on Monday, out on Friday. 5 days, and I do not want to sit in front of my computer for more than 10 or 15 minutes. If you don't have something for me, you best, please don't waste my time. Because it's nothing but wasting your time to try to explain to me what you think is good about something that doesn't fit for me. Okay? I'm 60, I've been doing this long enough, and I come from a group of people where we really honestly don't care. And it boggles our mind why it is that the younger generation thinks if they talk long enough, they can convince us otherwise. It boggles my mind, it really does. All right, so DKG, let's take a look at U.S. Steel. Now, you said you jumped into U.S. Steel at 31.18. I'm assuming that was Monday? No. It wouldn't have been Monday. It would have been sometime last week. Okay, had it been sometime last week, 31.18. You sold the 32.50s. Okay, well, it's over 32.50. So, yeah, you're going to be back into cash on a Monday. If by Friday, because this is Wednesday, okay? Tomorrow is Friday, so I don't know if you which one you sold third day. What happened to AMC? Because we are in a society that has no money after bills are paid. I can't help you out with that one, dude. Seriously, there is always a way. I have no sympathy whatsoever for anybody. None. And the reason why I have no sympathy for anybody, I lived in my warehouse. I shit you not. I didn't have any money. I lived in a van for 9 months. Yeah, I understand that. Okay? I lived in a van for 9 months while my child was being born, and my wife was living at home with her parents because she was under her father's insurance at the moment. And I didn't have any money. So I lived in my van and I worked in my workshop. And in my workshop, I actually had a bed where I was there 7 days a week. And the wife would come and bring me dinner, lunch, and breakfast. Okay? So I actually lived in my shop for the first 9 months when I started my business back in 1988. Okay? So I know what it's like to struggle. So I don't want to hear, oh, I don't make enough money, oh, this or that. I don't want to hear it. Okay? If you have to, live in a van. If you have to, live under an overpass. Live in the woods. Live in a tent. Figure it out. There's always a way. Okay? It's only the people who struggle the hardest that don't complain. The ones that complain have no desire to do anything. What area code are you calling from so I know it's you when you call? It's 941. I'm in Florida. Now, just because it says Florida, don't automatically assume it's a spam call because I'm calling from Florida. And a lot of spam calls come from Florida. Okay. All right, so let's keep on going. Oh, so we're basically done looking at stocks. It's 11:15. I'm out of here in 15 minutes, and I'm going to answer whatever questions we have left. Okay, so I respect you for living through nothing as I am now. Yeah, Stephen. Figure it out. It's an awesome idea. Here's a great idea. Find a cheap rental. Find an old RV. Find someone where you can park an RV in the backyard. Bust your ass. Work 2 jobs. Do whatever it takes in order to get there. Did you play in Scarface movie? No, I did a couple of movies back in the 80s. Believe it or not, I was an actor and a model. I used to be good looking. I need more. All right, now let's keep on going. What stocks do well during stagflation? All right, so Kivo Jump. What stocks do well during stagflation? Here's an interesting one for you. Okay? Are you ready for this? You have companies that have been in business over 100 years. What has happened in the last 100 years in the economy? Well, you had World War I, World War II, Korea, Vietnam, the stock market crash at 29, the Great Depression, the oil embargo of the 70s, the stock market crash in 87, the dot-com bust, the Y2K debacle, whatever you want, okay. And then the 2008 financial crisis, the 2021 pandemic, Iraq, Iran, Afghanistan, all that bullshit. Yet there are companies that have consistently increased their dividends during that time frame. Those are the companies I like. Those are the companies that I buy. Okay, I'm not looking to buy something like NVIDIA. You buy it and it shoots straight up. Yeah, no, that doesn't work for me. Okay, I'm 60. I have no desire to go back to work. I've been working since 1973, probably longer than some of you people have been alive. Some of you, not all of you. There may be a few of you older than me, but here's the thing. If it's consistently profitable for more than 2 decades, that's what I look at. Conflict equals profit. Hey, Steven, do what you gotta do. Stay away from your friends. Stay away from women. Stay away from entertainment. Take all your time, all your money, all your effort. Nobody cares about the struggles a man has. They only care about where is he now? What does he have to show for his work? That's it. Okay? You're going to be nothing until you become something. Okay? If you do not come from a rich family is going to have to come from you. My friend's already left. Dude, the best revenge is success. Get out there, bust your ass, do whatever it takes. Whatever it takes. Okay? If you have to live in a garden shed with the crazy old lady down the street and mow her lawn as a trade-off for a place for you to crash, do whatever it takes. Every dollar you put aside towards your future gets you one step closer. Find something to do. Find a way to contribute to society where you can be paid for it. Okay, we all have our own natural talents. 86 is in the house. Fast 8. Bito, no. Hell's Cat. I'd appreciate you look at MLKN. Great company, industry leader, Dividend. Oh, see, Hellcat, I feel bad for this. You like that speech? I feel bad for this because I'm going to put up MLKN. And I'm going to say, hell no, because apparently you weren't listening. How about my ex's basement? Hey, do whatever it takes. Because think of it this way. You're at whatever age you're at. At some point in time, you will be 60, you will be 70, you will be 80. You will have children, you will have grandchildren. You will tell them the story of the struggles you did. Now, the story is going to end one of 2 ways. I struggled, I did this, I did that, and I became successful, and this is where I am today, this beautiful beach house on the beach with all this money, all this shit. It can be that way. Or you can be bitter and saying, I just kept getting pushed down, shit on, pissed on, all this shit, and I got nothing from my life. Be glad where you are. All depends on how you want your story of your life to turn out. You do whatever it takes and keep on moving forward. Have a goal in mind. Once you get that one, great. Have another one ready to go after it. Keep working. WiMAX, no. AMD, Advanced Micro Devices, no. Dividends, no thank you. What part of that didn't you understand? I'm at 50 with no kids because I know. Dude, I hear what you're saying. Okay, Renee, WiMAX, no dividends, no consistent increase, no thank you. Okay, YMAX doesn't fit. Advanced Micro Devices, Bumblebee. No dividends, no thank you. Bumblebee, I got it the first time. Renee, I got it the first time. Fast 8, I got it the first time. Bitto, no. YMAX, no. AMD, no. I'm having a difficult time. Why you guys don't understand this? ARCC, no. Oh, you got it? What's it mean when it gaps up? It doesn't mean anything. It just means it gaps up. That's all it means. Okay, so take a look. That's down, that's down, that's down. That's down, that's down. All right, here's a gap up right here. Okay, what does it mean when it gaps up? Okay, well, right here, the 5th of November, okay, the 5th of November, it opened up at 2302. It hit a high at 2348, a low of 2302, and it closed at 2347. That's all it means. The very next day, the market maker said, you know what? I'm going to go a little bit higher. Okay? The gap means absolutely nothing. It means it closed here. The very next day, it opened there. That's all it means. Steven, mean there's room for bacon. Yeah, always room for bacon, brother. You know what I like? I like candied bacon. Oh, God, that's good shit. But you got to experiment. Do you like candied bacon with marmalade, with jelly, with honey, with maple syrup? Ooh, real maple syrup. Not that fake imitation crap. I'm talking the maple syrup that you import from Canada or upstate Maine. How much do you invest in Ford? I like to keep all my investments about the same. You know, 20,000, 20,000, 20,000. Well, sometimes it goes 40,000, 40,000, 40,000. Canadian bacon infused with honey. Well, why not infused with Canadian maple syrup? Ooh, that's good. All right, Hell's Cat doesn't have weekly options and it won't fit the strategy. Thanks, 86. Where have you been all night, dude? I've got to field all these questions. CP, Hell's Cat, he won't touch it. Monthly options are all that are offended on it. Alrighty. All right. QUBT isn't a dividend stock. Thank you. Uh-oh, I missed that one. WBA. Uh-oh. I missed all these questions. I'm going to go all the way back. I can't believe I just saw it. Somebody had the nerve to ask me about Coney. Are you shitting me, Coney? All's that telling? Mr. Rizzo, Walgreens thoughts. Amazing dividend, low price earnings call tomorrow. You like this? Yeah, I got a whole bunch of it. Had Buffett's ETFs outperform the market? I'm not familiar with that. I love Walgreens. I do. Okay, so ask tomorrow night. Wait a minute. Wait. Hold the phone. Today's Thursday. Tomorrow's Friday. You know what that means? No. Hey, good night, Saffron. No meeting tomorrow night. No live tomorrow night. No live Saturday. So the next time I'm going to see you guys is Sunday night. Now, last year I did every single night. 359 shows. 359. 2.5-hour shows, 3-hour shows. This year, Friday night, Saturday night, okay? Walgreens, amazing. Yeah, Mr. Rizzo, I love Walgreens, I do. And we actually did Walgreens earlier tonight. Okay, we actually looked at Walgreens already. Mr. Rizzo, hoping so. 25-cent dividend, quarterly. Hold on a second. James, what are your thoughts on KAC? Ooh, Kraft Heinz. I like Kraft Heinz. They've been in business for over 100 years. Okay, over 100 years in business. I think they're pretty good at what they do. Okay, so just take a look at where's the price? Where is it going? Remember, there's going to be a high, and then it's going to be profit taking. Once the profit taking is done, I'll find a bottom and go back up. Where is it? You can look at it this way. It's either a roller coaster, okay, or it's a river. Wherever it goes, Okay, it's going to go up, and then it's going to go down, and then it's going to go up, and then it's going to go down. That's all stocks do. Math seems too good. I'm thinking I'm wrong here. Mr. Rizzo, I like Walgreens. So let's take a quick look. Walgreens, WBA. Okay, here we are. Look at the last couple weeks. Okay, right now it's at 922. Okay, so 922. So the 950s are going for 46 cents. Your math is not wrong. Let's take a look at it. Let's change this to covered stock. Let's get out of there. Let's do the 950s right here. Let's go just one contract at the market. First thing in the morning gets filled. Here's Johnny. You ready? Buy one covered call, Walgreens. 117 January 25. The 950 call against Walgreens stock to open at the market. Okay, break even is 877. Well, it's currently at 929. Maximum profit, $73 per contract. Let's get the calculator. $73 per contract. Get rid of that. $73 per contract divided by 877. Okay. Divided by 877. Dude, you're shitting me? Look at that. 8%? Yeah, those numbers can't be right. But it would be nice if they are. So here's the thing, Mr. Rizzo. First thing in the morning, the numbers. Hold on a second. Okay, these numbers here. Paul, how are you? Okay, I got a couple questions over here on YouTube. Third day, it's only a couple of companies that will last. Home Depot, McDonald's, Walmart, Target, Amazon, Coke, because everyone in the world's drinking. Yeah. KHC is on the list. Just have to look. The best time to get in. Yep. Thank you for that. Okay, so Mr. Rizzo, the numbers here, okay, this is the stock way up here. The bid, the ask, the high, the low, the volume, all that kind of neat stuff. The numbers down here is the option chain. Okay, the 750, the 8, 850, the 9, and 950. Okay, so currently it's at 929. The closest strike price is going to be either the 9, 70 cents, or the 950, 46 cents. They're both going to give you way over 1%. But Mr. Rizzo, do your calculations on the 9. Okay, so the 9, you take 29 cents off of this right here. And it would be 41 cents. So you walk away with 41 cents. But it's a safer trade. Now, if you do the 950s, not only do you get the 46, but you also get the difference between the 929 and the 950, which is an additional 31 cents a share. So instead of getting just 46 cents a share, you're getting 77 cents a share because the stock went up. But the 950 is not as safe as the 9. The 9's a safer trade. It'll get you around 4 or 5%. But the 950, yeah, it'll give you a nice percent, but the stock has to go up. See, I like safety over profitability any day. Safety for me. Alrighty. Be careful running around. Yeah. Okay, yeah. Also, they're having earnings tomorrow morning. CP, you're absolutely correct. I'm not looking for the dividends. I'm looking for the premiums. He uses dividends paying stocks as the base stock due to their relatively safety from taking. CP, it's a great way of looking at it. Super substatic, Pepsi. Okay, we don't really have time to look at anything else. Got 1 minute left to go. All right. Okay, Graph. How you doing, Graph? Now, Graph, I'm terribly sorry you're getting here now, because I finished my show at 11:30, which is only 1 minute away. But I do have a bunch of questions I got to go through first, but I'm here every night except for Friday night and Saturday night. Every night, 9 p.m. Eastern Standard Time. All right, thoughts on Nike. We already did Nike. Stonks, I have no idea what that is. CP, I've got 7,500. Where am I starting? All right, Kosher, I don't know anything about you, so I really honestly couldn't tell you anything. How often do I do this? Well, last year, 2024, I did it every single night. 3 hours every single night. This year, I'm taking Friday night and Saturday night off, but still 3 hours. Okay? I start at 9 p.m. Eastern Standard Time, and I run right until 11:30, quarter or 12. Okay? So I'm glad you're here. Thank you for showing up. If you're interested in a safe, predictable, consistent 1% per week, that's over 50% per year. 50% per year. I will see you Sunday. I will be here Sunday. Make sure you say hi, and I'll thank you very much. All right, Dell. Ooh, I love Dell Computer. That's an awesome one. You love the shirt? Believe it or not, I should have these for sale in my store, but I'll get around to it. Tauntaun Walkers. Okay. Tauntaun Walkers. Is this pre-recorded? Why do I have somebody say that every night? This is not pre-recorded. See, I like it when people say that. So, is this pre-recorded? Well, how can I be answering the question at 11:31 p.m. on 1/9/25? Okay? No, it's not pre-recorded. So there's really no downside to selling covered calls other than your shares getting called away. Well, Michael, it's not really a downside. Think of it this way. We're just looking at Walgreens. Sweetie Jones, how are you doing? Look at it this way. If I buy it at 9:34, right? I sell somebody the rights to buy it from me at either the 9 or the 9.50. Either one. Either one doesn't matter. Okay? If it's above 9 and I sell the 9, well, then somebody will take the stock away from me. But I'm making the profit. Okay, why are you investing? This is the question. Why are you investing? Are you investing because you want to own the stock and hold on to it? There's nothing wrong with that. I never tell people what they should do. But there's nothing wrong with buying it and holding on to it and collecting the dividends. Nothing wrong with that at all. That doesn't work for me. What works for me is 1% every single week. You've been doing this for 20, still not telling us. Wait a second. Still not telling us the hint like the cartoon Roadrunner. I have no idea what that means. Okay? And no, I have not been doing this for 20 years. Okay? I've been investing for 20 years. My first 5 years weren't that great. Okay? It wasn't until 2008. I tell this story every night. It wasn't until 2008 when my 9-year-old daughter jumped on my lap and saying, "What are you doing, Dad? Can you teach me?" Okay, where's Mike? I have no idea who Mike is. How do I get $100 a day? Kosher, I don't do daily anything. Okay? Makes sense, Bob? I'm glad it makes sense. Initial investment, Bob, it's totally up to you. Okay, you want to start out with $100? Hey, great. Some people start out with 1,000. Some start out with 50,000. Some start out with 200,000. Some. I get some students to have millions. I have some students to have thousands. I have some students to have hundreds. Just fun and games. Good job. Thank you. Okay. Everyone is different. Do not be dissuaded because you're at such and such age and you only have some. How can I contact you again? Sweet Jones, in the DM or in the bio, you will see how to get a hold of me. Okay, YouTube, I've had a YouTube channel for over 20 years. That's how you get a hold of me is there. My phone number is actually there. You can actually call me. Can't call me because I have a blocker, so if I don't know who you are, your phone doesn't go through. Sean, you want me to look at Coney? Hell no. Okay? He's stretched thin between TikTok and YouTube. That's why it takes so long. CP, yeah, you're absolutely right. So, but what you're forgetting, okay? YouTube, TikTok, Instagram. You forgot all about Instagram because Instagram's right here. Facebook is right there. Facebook, I get no questions at all from Facebook. None. Okay? Now, I broadcast on it every night, but I have not a single question has ever come from Facebook. I don't even know why I do it. All right? So, anyway. Makes sense. You like the shirt? Yeah, I'm going to actually get the shirts up on my... I'm going to get a merch channel. Merch. Because I got a bunch of ones. I got this. That's a no. What the hell were you thinking? But my favorite is but wait! It gets worse because there's a shitload. And if I had more time, I would do Coney and we would do that. Hell no, it gets worse. Okay, CRDO, never heard of it. Nestle doesn't fit. ARCC, no. This weekly dividend stock, would you recommend someone in Canada? Now, Nash, I do have Canadian students, okay? And I don't know what kind of obstacles they have. Yes, I know KMI is Kinder Morgan. I do know that. Marty, KMI is a good one. All right. Well, I'm past my time. Let's get these questions done. Not doing the put strategy here. Now, don't get me wrong. I love the put strategy. I just don't teach it here. I got one, AbbVie. You're absolutely right. AbbVie's a great company. I'm not showing it to you, though. Does he run the wheel elsewhere? Yes, I do. New here, what strategy do you apply for weekly dividends of 1 to 5%? What stocks? Okay, Lesbin. Okay, we got to change your wording here a little bit because most people starting out lose money by pressing the wrong button or saying the wrong words. Okay, I'm not looking for weekly dividends. I don't know of any company that offers weekly dividends. What the name of the show is, Dividend Investing for Weekly Cash Flow, which means it's a dividend stock. And I do a trading strategy that gets me weekly returns on dividend stocks. It doesn't say weekly dividends. Okay, don't confuse the words. So, I'm looking at companies that are specifically 20 years, 2 decades of consistent profits. Okay, and weekly options. That's where I get the weekly cash flow, from the weekly options. Lesbin, he will run here is covered call strategy, targets 1% per week income. Do you ever use black belt analysis? No. Okay, Dakota Kid, dude, I keep forgetting. No, don't try to drag me into that delusion you got there, brother. Not cheer. I was just helping him remember what he was saying earlier. Cool. Thanks, CP. Let's bin. Is chat from another stream or is it pre-recorded? No, there's chat from another stream. Okay, there's YouTube over here, TikTok over there, TikTok here, Instagram here, Facebook there, and Rumble down here. Okay, I got 6 channels going at once. Steve, how are you doing? Do you usually do several companies each week, or do you go heavy on one company or some week? No. Steve, I like diversification. Okay, so if I have an account, it's 20%, 20%, 20%, 20%. So if you add it up, 98% of all my money is invested at all times. I'm a big believer in the U.S. economy, okay? ExxonMobil, U.S. Steel, IBM, AT&T, General Motors, Ford, Bank of America, Wells Fargo, companies like that, Home Depot, Lowe's, these companies, your aunt, your uncle, your brother, your sister, the guy down the street, your neighbor, the people living right behind you, they work at these companies. I'm a big believer in the U.S. economy. Is chat from the stream? Yep. Josie Jam Joe. I think he's streaming somewhere else. Not sure. Instagram and YouTube. Yeah, all of them. Don't forget Rex Oh Jesus! Why do I keep falling for that? Live but pause screen to read the orders. Yeah, Mr. Rizzo, you're absolutely right. Because there's so many people here. Okay, if I didn't pause the screen, I wouldn't be able to answer each and every single question. So before I leave, I do answer each and every individual question. And as soon as I'm at the last question, I'm out of here until Sunday. APD, ooh, nice company. Okay, commodities. Bob, commodities is a totally different ball game. Dividend stocks only here. Thank you. Marty, big Marty. Yeah, Halliburton, love Halliburton. Kroger just paid a huge fine. Yeah, they probably did. BBAR. Never heard of them. Martha, good evening, and how are you today? DKG. Yeah, I bought X and sold the covered calls last week, then rolled the call to this week. Freaking awesome idea, dude. I hope you made money on it. Why'd you roll it? Okay, see here. Interesting thing about rolling. Now, what does rolling mean? Well, let's say hypothetically, U.S. Steel. Let's go back to it. Let's get out of here. And we're going to put U.S. Steel right here. Okay, now what he said is he bought U.S. Steel last week. Okay, here's last week. Okay, this is this week. This is last week. Okay, so he bought it over here. Okay, as if I remember, he bought it for like 31 something, and he sold it 30 and a half. He got his 2 or 3% out of it, and then as this week jumped in, instead of selling it and letting it go, Larry, I got that message. Cool beans, thank you. Okay, Larry, I got you. Okay, so instead of selling it and letting it go, he just rolled it forward. What does that mean? Well, when you sell an option, okay, against the stock that you own, it's called a covered call. When it comes time to expire on Friday, well, you have the ability to buy that option back and sell another one for the next week. That's called rolling it. So you can pick up 1 or 2% this week, and then as a new week comes, you can roll it forward again and pick another 1 or 2%. Now, I learned about rolling an option in, I think it was March or April of 2024. If I knew that in 2023, I would not have lost a single dime. But I didn't know. See, so every once in a while, you guys will give me a tidbit that I didn't know. And that was, I think, the only thing I learned all last year is how to roll forward. I have 5 jobs. 2 were full-times when I was in my 20s. Okay, Lindarella, that's cool. I started working in 1973 when I was still in elementary school. Hogan, would you recommend starting by selling a put and acquiring the stock with a premium? Okay, that's called the wheel strategy. It's absolutely nothing wrong with it. It's a great strategy. But Hogan, what you're missing, because you're new here, I would recognize that name. But what you're missing is what I am teaching here for free, no charge. I haven't said anything about a price to anyone about anything. I've written 14 books. I'm not asking you to buy them. I got a live morning trading group, which is a paid-for service. I'm not asking anyone to join it. But what I'm doing is I'm giving to you for free the trading strategy I taught my 9-year-old. Simple, safe, predictable, consistent, no way for her to lose. 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must, and then the numbers got to work. Okay? So what you're saying, yes, it's true. It's a wonderful strategy. It really is. But here I teach one strategy. Actually, I give away for free one strategy and only one. Okay, if you can make 50% per year on this one strategy that I give away for free, what do you think I actually charge for? Think about it. If I'm giving away for free a way for you to make 50% or more per year, what do you think I have up my sleeve that people pay me for? Think about that. Okay, so let's keep on going. Lindarella, imagine the GNZs is working that. I don't think it would happen. True. Smart. Thank you, Henry. We're almost done. 66 here. Cool beans. Brown sugar. Joys of being Canadian. Yeah, lovely. Do you think Playboy is a good stock? I can't even believe you're asking me that question. AGNC is a good dividend stock. Please show everyone. Okay, Heisman. Okay, we're way past my bedtime. I'm usually done at 11:30. That means I quit doing stocks at 11:15. Now from 11:15 until the very last question is answered, I don't look at anything. Appreciate the great strategy. Looking forward to more nightly talks. I'm here every night. Every night, except for Friday and Saturday. All right, so let's finish up. How are you? I am wonderful. AGNC, come back on Sunday night. We'll do the whole thing all over again, and we'll take a look at it. You said 1% a week. Yeah, 1% a week is over 50% per year. Okay, so if You are starting out, Irona, if you are starting out with $50,000, 1% a week is $500 a week, or $25,000 a year. $100,000, that's $1,000 a week, or $50,000 a year. Okay? What is the initial investment on this dividend? Okay, Bob, I honestly can't tell you that, only because each and every stock is different. There are stocks that are $2. There are stocks that are $2,000. You decide what stock you want to buy. Rich Bruner, Notre Dame won. Woohoo! Rudy is happy somewhere. Okay, Bob, like I said, I don't try to sell anyone anything. That's the last question. Last question. Done. I am out of here until Sunday night. You guys have a great night, and I will see you all Sunday. New England Dragway. Woohoo! All right, done. And you guys have a great night over there, out of here, because now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain. I lived a life that's full.